Welcome traders. This is Vishal and you're watching the weekly sectoral analysis. Before I start the video, I'll just like to tell one thing that kindly watch the entire video till the last, because in this particular video, along with the analysis, I'm also going to share few stocks which will be related to few indexes. So in case if you don't watch the entire video till the end, you won't be able to gain from this particular video, right? And one more thing, if you hear any sound coming from my background, I'm really sorry for that, because there is some sort of repairing work going on in my society. So it could happen that little bit disturbance could come in the background. Thank you. Now, as usual, I'll be starting with Nifty Futures, and currently we are looking at the daily time frame chart. In the daily time frame, we can clearly see that the price is in an uptrend. Prices are trading above both of the moving averages. But in the weekly time frame, if you see a little bit more clearly, obviously they are also near the short-term resistance, you can say. But the question is this particular resistance very strong that it can stop the upgoing trend? According to me, the answer is no. It is a possibility that 18,400, 18,500 and maybe even higher levels can be tested, 18,600 also. But I would be really happy if before this trend, if there is some sort of consolidation, some sort of sideways movement coming up, because if you see from this day onwards, this is 31st December, and from this day onwards, market has been able to close continuously in green. There has been only one day which has been in red. Otherwise, most of the days, yes, I agree that these two candles, even this particular candle, are smaller in terms of size, but nevertheless, overall market is inching higher. So some sort of consolidation, some slowdown, if it happens, I'll be really happy to see that, because if a rally wants to sustain for a very long time, then, after every 2 to 3 steps up, I always believe that one step on the downside is always necessary. Now, whether that happens or it doesn't happen, I think time will tell. But yes, overall, the setup of the chart says that the biasness is on the upside. Now, Bank Nifty Futures. In Bank Nifty Futures, we can see that the prices have come down just from the recent high, which was somewhere around 38,955 or 38,956. And after this drop, you can see this is the short-term support band. I would just like to share this band with you. The band is 38,516 to 38,260. This is a very, very short-term support band. This is not for positional traders. The positional traders support might come at this particular recent high, which is previous high, which is around 37,684 or 37,600. This is the immediate support for the price. And on Friday, market did come down, but it managed to close above the lower band of this particular support, and it has formed a hammer. So we can see bulls are trying really hard to keep the markets higher. And again, I would suggest by looking at the weekly chart also, 1, 2, and 3. Now, there have been 3 weeks continuously where the Bank Nifty has been able to close in green. If I just remove this particular Fibonacci, you will be able to understand there is some sort of selling pressure. This is not exactly a shooting star, but yes, we do have some sort of wick which has formed on the upside. So similar thing, if you see in the daily chart, there is a sort of negative candle pattern. If I inculcate these two candles, which is of 12th Jan and 13th Jan. So if there is a drop in the Bank Nifty Futures, or if there is a short-term correction, or if there is a short-term consolidation, I think it will be a complete welcome from my side. Private banks. I'm sorry, I just cancel it. I'll put it over here. Yeah. So in private banks, I think it is very much similar to the Bank Nifty chart, and we can see in private banking space, if we go to the weekly chart, again, the same sort of candle formation, we can see a sort of shooting star coming up. And this particular candle, this is not exactly a shooting star, by the way. This is sort of a shooting star, because the wick on the upside is not twice or thrice the size of the real body, but nevertheless, we can say that some sort of selling pressure is coming up from this particular Fibonacci extension, which is at 19,665 approximately. So yeah, if there is a short-term drop or a consolidation, I think it will be welcome from my side. And this is a support recent high. The previous recent high is the support, which is around 19,165, 19,150. So if you have a drop somewhere over here and after that we see some buying coming up, then I think possibly swing traders can start looking at a few stocks. From my side, I'll be sharing 3 stocks. The first one is obviously the HDFC Bank. Now, yeah, in HDFC Bank, you can see the prices have been able to close above this recent high. You can see this was the recent high at 1555. After that, we have been able to make a new high. We went up and we have retraced, and some sort of consolidation is going on. Post consolidation, if there is a up move which starts and it is the prices are holding on continuously for maybe 1 or 2 days on the upside, then we'll see a short-term upside momentum coming in HDFC Bank. My second pick is ICICI Bank, which I also, both these stocks, in fact, I've mentioned in my previous weekly sectoral analysis also. I think ICICI Bank is currently the leader in this particular pack. It is going up very, very efficiently, very, very easily. So currently in short-term charts, yes, it is slightly overstretched on the upside. And if I cross-check, yeah, it has been able to close above the resistance. But, you know, sometimes it does happen that prices do close above the resistance and they hover around and they can drop again down. So if we see some sort of correction or a profit booking happening, I think swing traders might be able to fancy the chances over here. The third stock is Axis Bank. This particular stock is not looking as strong in comparison to ICICI Bank or possibly HDFC Bank. But nevertheless, this is one stock which you should keep in mind. The reason for that is, as per Dow theory, we can see the price has made a higher high, and it has also been able to make a low, a higher low. So as per Dow theory, in the daily chart, we have started a new uptrend. Now, after this short-term dip, if we consolidate and start going up, possibly positional traders also can start looking at this particular stock. Let's switch to PSU banks. Now, in PSU banks, there are 2 different time frames which are telling 2 different stories. Now, let me start with the weekly chart. Weekly chart, you can see a beautiful trend line breakout happening and the price retraced. It tested the strength of the trend line, and now you can see amazing up move has started. Now, if the same thing, if I look in the daily chart, things are a little bit different. What we can see in the daily chart is we are still in a downtrend, and the reason for that is we are still making a lower high, because this particular high is lower than the previous one, and this particular low is also lower than the previous one. Okay, so basically we need to surpass this particular high. Once we close above this one and we sustain above it for a couple of days, then I think we'll start inching higher. And the stock obviously is SBI, because this is the only stock which I generally track in PSU Bank. And in fact, this stock has already started outperforming its particular sectoral index, because in the PSU banking space, we saw that as per Dow theory, we are making a lower high and a lower low. But in SBI, we have started to make a new high, which is a higher high. So if you see properly, yes, this stock is outperforming its index. So keep a watch on this particular stock as well. Now, metal pack. I had clearly told that the metal pack has started bouncing from this particular level, and and it has been able to close above this particular resistance. In the weekly chart, if you can see properly, also it is looking pretty decent enough. Nothing is looking as fishy or anything worth suspicion. Even the trend line breakout is looking beautiful in the weekly chart. And in the daily chart, I think things are good to go. just one more day close above this particular level will add a lot more confidence in the minds of the bulls for this particular index. Autopack. Now, Autopack, I think it is already outperforming. I think it is one of the indexes which started outperforming and started going higher even before the Nifty or Bank Nifty did. Initially, I think in the initial stages of the pullback. So basically, if you see, the rally has started and it has been able to close above this recent high. And in the weekly chart, if we look properly, yes, we can say that the prices have gone up too high, too fast, because we have seen three consecutive candles, three green candles consecutively. And this is a sign of strength. This is not the particular candle pattern like three white soldiers. If any one of you are confusing with this pattern, that is this a three white soldiers pattern? Because what has happened over here, after an uptrend, a consolidation came, and then again the uptrend did resume. So this looks like a three white soldiers, but this is not exactly like that. Although yes, this particular candle pattern at the juncture where it has come, it is extremely positive for this particular sector. And from this sector, I would suggest three stocks. One is Maruti Suzuki. Maruti Suzuki, I think on Twitter also I had posted a close above this particular level, 7650 will lead to a very good rally. And I had shared on Twitter, I also booked partial profits and still the positional trade is continuing. So this is one stock which you people can keep a check on in case if someone has missed it, and if the stock takes a dip and then again starts rising, you guys can possibly try to participate in a swing trade. The second stock from my side is Tata Motors. It is the leader of this pack currently. What has happened is Tata Motors had rallied in the month of September and October by a very big margin. So after such a big rally, large consolidation was extremely acceptable, and that consolidation is still going on. But in the short term, I think some sort of rally has started according to me, and we have also been able to close above this particular level. So in case if the rally continues, I think swing traders, especially rather than positional traders, should start tracking this stock and try to participate whenever you have good risk reward ratio. The third stock from my side is Ashok Leyland. Ashok Leyland is a stock, especially in the daily chart. If you see properly, what has happened over here is, as per Dow theory, if you look, we have been able to possibly, yes, we made a new low, obviously, in terms of a low. But if I compare the closing prices, okay, if I compare the closing prices, this particular stock was not ready to make a new low. It did not close below this 119 mark. Yes, in terms of low, it must have made a intraday low, but it was not able to close below this particular low of 119, which is a sign of strength. In the weekly chart, I think the stock is trying to inch higher. All right, it's looking pretty nice. And overall, I think positional traders should keep a watch on this particular stock. Financial pack. Financial pack, I think I don't need to say much. It has just started a uptrend, and we can see that the prices have made a higher high. Only thing is that once we have a higher low in place, then we'll be able to be extremely confident to initiate swing trades in this particular pack. All right. IT index. Now, IT index is one index which has been holding on very, very strongly even when markets were correcting. And even in the weekly chart, we have absolute no problems whatsoever. Even RSI is looking perfectly fine. We can see that after a steep rally, especially from the stock TCS Infosys, there has been a sharp drop and a sort of consolidation is going on. And this is the support band, and the support band is taking support from, you can see from these two highs basically. All right. And some sort of consolidation may happen, but overall the biasness will remain up. And I'll be sharing three stocks. One is obviously Infosys, the king of IT pack, which is already continuing on the upside. And this is also the stock which I had shared, I think, in my previous weekly sectoral analysis also. Second stock is TCS. TCS is already continuing its rally, which started somewhere over here in somewhere around 37.25. And I had also shared in Twitter, I think many days back. The rally is already continuing if we see a little bit of profit booking, if we see a sideways consolidation, and if the swing traders can fancy their chances, then please keep a watch on this particular pack. The third stock is actually an underperformer. Underperformer in the sense it's not that it has corrected when the market has gone up, or it has corrected when the IT pack has gone up. No. Underperformer in the sense that TCS is already continuing higher, Infosys is already continuing higher, and even this stock has rallied. If you can see from this point of 29th November, it kept on rallying, but recently, rather than staying on the upside, it came down, and I think there is a trend line support and a Fibonacci retracement. From there, the stock is trying to go higher. But I would suggest that until and unless it doesn't close above 1750 or 1751, the new rally may not start in the stock. Once the stock closes above 1750, 1751, you will see decent upside in this particular stock. So keep a watch on this particular stock. CNX Pharma. CNX Pharma, in the weekly time frame, you can see the rally has started. It has taken a support from this previous high, and a small candle has come up, and the small candle has come up. The reason for that is consolidation is going on in the market. We have one big green candle and all other candles are very, very small. So basically, Pharma pack was in a range in last week. Overall, it is in an uptrend. It is consolidating, and maybe after the consolidation is over, probability is that an upside breakout could happen. From my side, two stocks which you can keep an eye on. The first one is Sun Pharma, which is already outperforming, and it is one of the strongest stocks in pharma right now. And second one is Cipla. Cipla is relatively not performing. According to me, even in the weekly chart, it doesn't look very, very strong. Strong in the sense, yes, it is in an uptrend, but overall it is sideways. You can see it's not very easy to time the stock. You can see the RSI also is looking very lackluster. So it is certainly not easy to time the stock. Be very, very careful, extremely careful if you want to trade in this stock. It could lead to whipsaws, but if you get it right, it can also give you a very steep upside move. So you should keep this particular stock in your tracking, wherever you're tracking it in your Excel sheet or wherever, but keep a watch on the stock with a view of a swing trade, not a positional trade. I'm just be clear about it. You should track the stock only for a swing trade. FMCG pack. FMCG pack, the trend is flat in the daily time frame, and in the weekly time frame, the trend is again flat. Prices have been able to bounce back, but if you see Bank Nifty, Metal Pack, Auto Pack, IT Pack, each and every index has been able to go up very, very high. But FMCG pack did go through that initial pullback, but was not able to surpass this particular resistance, which is the previous high. Until and unless this doesn't happen, that I don't think so any sort of strength will be seen in this particular pack, especially if you see this stock, Hindustan Unilever. Now, what sort of candle has been made over here? This is not looking really good. So if a person who is trying to go along in the market should stay away from this particular pack. All right, reality. Reality is trying really hard, extremely hard to come out of that downtrend. In the weekly chart, it is looking good. It is looking impressive, but I think still if there is some sort of consolidation which will happen in next few coming weeks, I will not be surprised, and it should happen. According to me, it should happen. And yes, we can see a big green candle over here, but until and unless we don't surpass above this particular level, 525, 527, Until and unless this doesn't happen, please stay away from this particular pack. And one more thing, sometimes it can happen that before the consolidation gets over, this has happened with me a lot many times in my trading career of 15 years, that we are expecting that the stock or the index will continue consolidating, and after a very large consolidation, a breakout will come. But it can also happen that before that consolidation even completes, the breakout happens. If that thing happens, don't wait for the consolidation, just go for the stocks, because sometimes the strength in the market is so extremely high that it doesn't even care for a consolidation, because as soon as we'll be closing above this particular high, this is one, and this the 2 points, we'll be starting a new uptrend in the daily and the weekly chart. Consumption index. Now, consumption index is one index, I think, where all of the swing traders should keep a very, very keen eyes on this particular pack. The reason is, overall, if you see, we have made a new low over here, okay? But if you compare in terms of high, then this particular high is higher than the previous one. So technically, we have started a new uptrend in the consumption stocks. In the weekly chart, it is looking pretty okay. It's not great, but it is looking pretty okay. And I think swing traders should keep a keen watch on this. Two stocks from my side. One is Asian Paints. This stock is in an uptrend, and this is trying to go through a profit booking spree, a short-term profit booking spree, or a consolidation. And second one is Berger Paints. Both these stocks are looking pretty decent. Especially the Asian Paint stock is much stronger than Berger Paints, because Berger Paints has been able to correct, and then it is trying a new uptrend, and then it is coming down. But Asian Paints, on the other hand, is extremely strong. So if you can fancy your chances, and if you can see any new swing trade coming up over here, then you can keep an eye on this particular pack and the stocks. Mid-cap index. Mid-cap index, you can see very clearly in the weekly chart, we have been starting a new uptrend. We closed above this particular high. If we close above this high also, it will be even another victory for the bulls. And in the daily chart, it is looking simply amazing, because we were making lower lows, and out of that, suddenly we have started making higher highs. So basically, now we are in an uptrend, and traders should concentrate in positional trades in the mid-cap index. I hope this educational video did help you to get perspective of the entire market, of the stocks, the sectors which can outperform and underperform. And if you can see that this particular video is very valuable for you, kindly share this video with other traders who can actually understand how the market is working right now. And let me know with your comments below how helpful was this video for you. Thank you. Stay safe and trade wisely.